Hey guys, Joshua here, local realtor in the East Sacramento area. Just wanted to give you guys a quick update on what I'm seeing in the marketplace right now, as well as the buying and selling side of things. I think it's quite interesting, and I think it's pretty good for both sides, honestly. Let me show you what I am seeing. So right here we have the Lamb Park, Curtis Park area. This is the market data. Whoops, get off of that. So we're seeing consistently right around 20 days of a house being on the market. And consistently we're seeing the home sell for about the list price, maybe a 1 or 2% over from last year above in the Curtis Park area. And then East Sacramento, we're seeing the same thing, right around 20, 15 days of a house being on the market, which is very good. And we're seeing the home sell for, I would say, 2%, or yeah, 1 to 2% historically from a year from today over list price, which is quite good. And then here we have Sacramento, Sacramento County, all of the counties, and you can't really stack this up to East Sacramento, but it's good to look at what Sacramento in a whole is doing. And you can see we're consistently right around 15 days on market. And we're consistently selling for, yeah, right around 2% above asking price, which is good for sellers. And you may be thinking, okay, well, if I'm looking to buy, that really, how does that help me? Well, so first thing is we're never going to see low housing prices and low interest rates. It's just not. I mean, logically think about it. It's not going to happen. So what's good right now is the cost to borrow money has historically never been cheaper. And this right here on the bottom, this is the 30-year Treasury bond yields, which basically is this follows interest rates, or this technically this creates the interest rates. It shows you where interest rates are going. And this is what I like to track to see, to get a feel on exactly where the market is going and kind of where it is heading. You see, since March, we've kind of started this uptrend as interest rates slowly were rising, and we've had a bit of a I want to say a sell-off, but coming back down into the marketplace. Now, there's multiple ways to interpret this, but the one way I interpret this is the government data that we've been seeing through job reports, through import and exports, through the CPI index. Everything was starting to look like the economy was coming back to full health, but the bond market since March of this year was like, wait a minute, there's some things that I would like to see that are better, and I'm not fully buying this full recovery just quite yet. And if any of you know about trading, the bond market is always a leading indicator of kind of what's going on in the general stock market and economy. If we look back, I mean, back to here to July, we started to have a huge sell-off in the yields, and we had a little bounce. But I mean, what's even more interesting is January 10th of 2020, we started to see yields come down before the epic, stock market crash whenever we had the full shutdowns go on. So the bond market, for how I like to interpret it, it's got a pretty good 2-month indicator of where things are going. So coming back over here, I'm seeing that the bond or the interest rates. I mean, we could see this come back down pretty much, pretty not significantly lower, not lower than where we were down here at the bottom, but I could see interest rates continuing to come down to the downside, which means borrowing money is going to be cheap. I mean, that's ultimately what you want in buying a house, is the cheap rate of borrowing money. Whenever you buy a house and the housing prices are low, but interest rates are at 5-6%, well, that's pretty much the same thing as housing prices being high and interest rates being low, right? I mean, you just have to pick and choose what you want. Do you want a cheaper? Oh yeah, I bought this house for 400,000, or do you want? Oh, I bought this house for 500,000, but my interest rates were 1.5%. Everything is dependent on you, and coming up, having someone good in your corner to come up with a good game plan, exactly what you're looking for, is always a key as well. So I'm seeing interest rates continue to go on the downtrend, at least for a couple of months. I'm not a financial advisor. I'm not a CPA or anything like that. I just look at charts and see momentum, and it looks like we'll continue to see interest rates on the downside. And also for buyers, I mean, look, this is the sales of the multiple offers all across Sacramento, Placer, Yolo, and El Dorado County. Multiple offers in April of this year were high. I mean, being in the real estate, we saw that, and being in real estate, obviously today, we're seeing a lot less competition for buyers on property. It hasn't really started a price decline yet, but the competition is not as fierce as it was. So that, with lower interest rates for the time being, I mean, it's a good stage to buy, and it's also a good stage to sell. We're not going to see this type of market for very long. There's always going to be something that gives and takes. It's just trying to figure out what and being positioned correctly for the right direction and the right game plan. And this is Sac Appraisal blog, that he said that we should have had this and we had that. So, I mean, right now we were overextended, but things are starting to level off. Yeah, I mean, that's pretty much the market update. Oh, we got the Farm to Fork Festival, September 17th to the 18th. There's going to be all the great local foods, the regional wines, craft beers, all local craft beers. It's a great 2-day event. Bring the family out there. Get outside. The weather should be great. Smoke hopefully won't be too bad or bad at all. This is a free event, and it's gonna be a great time. Maybe see a couple of you guys out there, and yeah, get a beer. So, but yeah, that's what I got for you guys. I hope your weekend was great, and I look forward to sharing with you what I'm seeing on the next one. All right, take care.